The world moves on. Unbelievable technical problems again. Microphone problems that never had a problem before. Tried this, tried that, tried the other thing. Rebooted, tried this, tried that, tried the other thing. Canceled the webinar, shut everything down, and then a window pops up and says, hey, it's time to set up your microphone. Oh my gourd. So anyways, we're here, and I need to burn through this. Busy day, lots going on, busy week too, huh? But without further ado, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on long term, and never risk money you cannot afford to lose. Or, welcome to today's webinar. Let me remind you that the purpose of this webinar is education. This is not an alert service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of the future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Something like that. Something like that. Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Let's trade some Forex, bro. I've been doing this for a very, very long time. I was just looking at something the other day, and I'm like, oh my God, was that 2002? Like, holy schnicker schnocker. I met with a banker just yesterday. We're having lunch, and he's like, hey, so, well, how long have you been doing Forex? I'm like, 2000 something. He's like, oh my God, that's like forever. I'm like, yeah, in retail, that is forever. That was the beginning of time. So, bankers have been doing it a long time, but retail anyways. Hey, I do these sessions 7:30 in the morning, New York time, approximately London lunch, and the whole idea is for me to help you get good fast. How would you like to be filthy, stinking, successful quickly? Well, that's my role. And we're not charging you any money, which is fair. So here's how we need to pay the bills. Once you get filthy, stinking, successful, you're going to use Traders Way as your primary broker for your successful Forex trading business. Agreed? See, if you don't, you're just a freeloader. That's it. You're just freeloader. And you can't possibly feel good waking up in the morning and say, yeah, I'm sucking someone else's success. I'm a big, fat success sucker. So, I know your mother would be disappointed. So anyways, I know that's not you. So I appreciate your loyalty, and I'm trying to earn your respect every single day. If I'm sick, I trade. If I'm happy, I trade. If I'm grumpy, I trade. If I'm tired, I trade. If I'm traveling, I trade. So here I am in one of the worst Marriott hotels in the world. I can't believe it. I'm so disappointed with I don't know. So anyways, I fear it's the end of capitalism as I know it. That's how bad it is. So I'm like, that's it. Look at this Marriott. It's over. Right? Time to move to Venezuela. So anyways, hey, let's get going. I don't have a whole lot time left in the world, so let me get this out of the way. I had Traders Way up. I'm in Boston, which is kind of a pretty good town, pretty neat town. Let's see if I still have this up. No. Let's do it this way. I was already logged in like 10 times, obviously, so. All right, let's do this. So, hey, it's Monday. We got to do through the fundies. Yes, I'm logged in. Okay, that's good. Let me move this over here so you can smell it. How does that smell? You got it? Can you? All right. So let's start with the calendar. And I need to adjust this. Let's get rid of that. All right. So, yeah, we good? Smells like bacon. There's in San Francisco, there's a coffee shop that puts rendered bacon fat into their lattes. Yeah. Oh, yeah. Yeah. Well, if you don't understand why, um, let me tell you that McDonald's puts lard in their milkshakes. So, hey, man, it's been around a long time. All right. So, European GDP. Yep, yep, yep. Good, good, good. Actual 0.3, 1.6, 0.8. Blah, 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 blah. It's like, it's not even news, right? European CPI. All right. So, a little bit of okay. I mean, it could be worse, but it's we got BOJ, and that's the big one, right? And then the RBA. So we got a great Asian session. I don't know where I'm going to be when that comes out. Um, I don't know what's going on. Apparently, I don't need to shop for a headset anymore. Yeah, if I'm here, maybe we trade it together or something. I don't know. I can't promise you anything. Being away from home and stuff. So depends on how my test goes. I guess if it goes really good, I'll go to the bars and get drunk. If it goes really bad, I'll go to the bars and get drunk. If it comes out as if I'm ambiguous, I'll just come back and trade because the best drug in the world is money and success. So anyways, that's what I got to do today. I have an examination on international trade. International trade. Can you imagine me in international trade? Yeah, I love it. And guess what? Some of the more complex stuff for a lot of the students are the foreign exchange stuff. It just people find it very complicated when you're talking about, well, it's all relative, depends on the value of the euro and that all that kind of stuff. So yeah, but Ryan, it's a test. Like I appreciate that, but it's a test, and so most tests are designed to figure out what you don't know, which is BS, isn't it? They should just say, hey, look, have you read the materials? Do you have a general understanding of everything? Boom, everybody should get close to 100%. But it's like, no, let's throw in something that probably isn't even in the readings. Let's throw in something that wasn't even discussed clearly in class. Oh, you don't know that? You don't have a PhD yet? Oh, we're going to have to knock you down for that. So, anyways, it's Harvard. It's easy. It's Harvard. That's cakewalk. But it's funny though, like the stuff that we discuss every day, when you start building it out with models and mathematics, it gets like so unbelievably ridiculously complicated. And yet it's common sense. And I find when you start doing the models to describe the real world, it's so complicated. I'm like, I don't get it. But if you use just common sense, you could be someone with no education at all, and you get it. The thing is, you just wouldn't be able to model it. So whatever. So moving on.com. Yeah, ISM manufacturing. Okay, like I said, trickle down. Less important these days, but especially with the dollar getting strong, that means that we'll export less, right? Again, that could be on a test, right? Dollar strong, we might export less because our goods are more expensive to foreigners, right? But it also means we'll import more because our dollar is strong and everybody else is cheap, right? So maybe it all works out, right? We got the interest rate decision, the big no, right? The big nothing. We're going to hear the giant sucking sound of nothing. But how are they going to light the candles and set the table and dim the lights? Like, how are they going to get us ready for our big consummation of interest rates hikes, right? Ryan says, sure hope that means a good trade balance and stuff. Well, why do you need good trade balance? So in this case, if our dollar is strong, we just buy stuff from foreigners. Okay. And therefore, foreign products are cheaper than I can make them here. So there's either an absolute advantage or a comparative advantage, right? Of the foreign workers or the foreign production, and then we import that with our strong dollar. It's just cheap for us, right? So one argument is if it was made in America, like I'll give you an example. One time I was at Home Depot with a friend of mine, and he owns a manufacturing business. He's actually sat on like $2 million worth of raw aluminum. And if you want to see somebody sweat bullets, do that. Watch it lose money day by day. But anyways, so we're at Home Depot looking at barbecues, and these stainless steel barbecues, and they were like, I don't know, like $600 or something, right? They're not super fancy. And he's like, it cost me $600 just to buy the stainless steel, just to make that. It's like without even designing it and cutting it and having someone put it all together and then put it into a box and ship it to Home Depot. It's like just the raw material would be $600. So he's like, there's no way that could be made in the United States. Just totally impossible. So, but let's say I buy that. Let's say I buy that barbecue for $600. Now I have a barbecue, the foreigners win, right? So to speak. Yeah, but people at Home Depot have jobs, don't they? And the suppliers have jobs, and the truckers that move the stuff around from factory to Home Depot, they have jobs, and the customs people have jobs. But the other thing is, if it costs me $1,500 to buy it, I have $900 less. Okay, I have the same barbecue, and everybody has their same jobs. It just cost me more, and now I have $900 less. But by buying foreign products, I get this beautiful barbecue, but I got like $900 left over. So I'm going to get some new lawn furniture, and I'm going to get some of this and some of that, and I buy more crap because I'm a big fat American, and I have no money in the bank. But I have a $600 stainless steel barbecue, and I got some patio furniture made out of plastic, but it looks like rattan. All right. And I'm going to use my Home Depot employee discount. But anyways, but you see, like all of a sudden now I buy TVs and stuff, and more things need to be shipped and all this kind of stuff. Plus, I might be poor, but I got all this crap, so I feel rich. You know what I mean? I'm going to watch the football game on my 70-inch TV, and I'm going to barbecue out back on my beautiful $600 five ceramic burner stainless steel barbecue. I'm like, I'm filthy stinking rich. My credit card's maxed, and I have no money in the bank, and I haven't even thought about retirement. And I sold my children. So, that's that. Let's living in America. Living in America. Wow. Right? Hot damn. All right. So anyways, RBA, BOJ, big, ISM, fine. It'll be all right. Obviously the monster, Wednesday, the monster nothing, the big silent monster, the invisible monster. It's going to be Wednesday, but we want to know how they're going to, we want them to tell us they're going to raise interest rates. And if they are, if it's like pretty much a done deal by the way they say things, dollar gets ripper strong, boom. Okay. And then Thursday, BOE, 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 BOE. All right, they're not going to do anything. So the big news is whether Carney admits he's going to quit. I wish I could quit you. They're not treating him with love. And he's pretty pissed off, I think, about Brexit. Right? But he's not the government. So I think he's like, dude, really? You stupid mother, why would you do this? Right? So I think he's just going to say, if that's what you want to do, you socialist, communist, Englishman, you have it. Go ahead. Screw it up. Take your big island and just sink it economically at the bottom of the North Sea. I say, I think Scotland should attack. Honestly, time to put the kilts on, drop the drawers, put the kilts on, and go. Let's take them, man. Let's do it. Let's take them. They're weak. Now's the time, right? Go William Wallace on them. We'll call it the new William Wallace economic policy. So, yeah. Yeah. Nah, once you got England, you just take France. They won't fight. Right? All right. You know there's an old joke about um, buying used French and Italian um, weapons, right? They're slightly used. You can get a good deal, right? Never fired, only dropped once. Good deal. So anyway, so we're going to find out if Carney quits. He might tell us here, and that's going to be the big thing. And then non-farm payrolls on Friday. Yeah, I'm going to be around for that. Faux show. So that's going to be at fxstreet.com. Already looking forward to it, right? And then more over the weekend, we got more details about the Bank of Japan. And you know, we want that yen to weaken. And remember, the reason it's weakening now, or let's say the reason it's more believable now, has to do with interest rates going up in the United States. And you can look at the 10-year T-note for that. We've gone from 1.4 to 1.85, and we're probably on our way back to 2.0. When we tapered, we were at 2.0, and then we dropped to almost 1.0. Just remarkable change in interest rates. So it's all about the 10-year T-note. Yeah, it's funny, right? The yen cannot weaken, right? The Japanese yen cannot weaken, even though they have negative interest rates, until the Fed makes its move. I mean, that's an education in of itself, isn't it? How interesting, as they say, right? Okay. Global village. So, anyways, I can't quite see this. So you like my beautiful suite? What a sweet suite. Telling you, man. I'm unpacking my suits and stuff. And I throw it on in the other room there, and I open the luggage up and grab my suits, and I'm like, "Where's the closet?" And I'm like, "Is it by the bathroom? Is it in the bathroom? Is it next?" I'm like, there's no there's no closet in the bedroom. I'm like, well, where do you hang your stuff? So I go out to the living room. There's like a bar over here, and couches and all this kind of stuff, and it's over by the front door. I'm like, oh my god, out in the foyer is where I put my suits and ties, and I'm like, what? This place is crazy. But Ryan, you might be happy to know that my wake up call did arrive. It only arrived 11 minutes early. I was already up though, of course. But at least I got it. And it wasn't 2 hours late, like places in Johannesburg. So, all right. So anyways, I'm having trouble seeing this. I'm going to have to squint. All right. So, well, I'm just going to stick to the nets, right? The nets and the zeros. Okay. Euro net short, right? The market is short the euro and getting shorter and shorter and shorter and shorter. Does this have anything to do with the euro? Has the monetary policy changed in Europe over the last 4, 5, 6, 7 weeks? The answer is no. So why is everybody getting that short? And remember, when euro dollar was going up, I told you and 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 told you. Well, in this case, everyone's getting short euro because interest rates have already started to go up in the United States of America, and they're just selling euros and buying dollars. Okay. Check this out, right? Little hesitation on the pig. It went too low too fast. People are kind of staring at each other, don't really know what to do right now. I know somebody buying pound, and I don't really get it. I find it dangerous. I find it uneasy emotionally. But he's doing very well. What can I say? The guy's done so. It doesn't mean I like it, but I don't know. Okay. Yen yen. Okay. Still a bit net long. There was a spike late last week or early last week. I believe, using my brain, it had come down and it's probably have come up and probably will head back down again. So, it'd be amazing. And by the end of the year, we'll probably be neutral to net short again. And Aussie. Okay, zero line right here, positive and not really growing very quickly. Okay, you want to look at the news here, and this is the interesting part, right? Okay, that's where we are price-wise. And I can't quite see all this. So the shorts, okay, there's the shorts and longs. All right, well, yeah, so very little change anyways. Okay. Big rally on the Kiwi, big comeback for a while, then nothing changed. Up and flat. Okay. And this is the general move on all commodities, in particular, or I should say, led by the rally in oil prices, but that has obviously stabilized. And then CAD, no change, no change, no change, no change. So you look at this and you say nothing's happened, but holy smokes, has that thing been up 100 pips, down 100 pips in the same 2 hours, right? It's been lovely. So I want to cover this, and then I'm kind of out of time because we were monkeying around with all the other stuff. So I apologize for that. Guess what? You get a whole bunch of countries together that are dead broke, and the only thing they have to sell to raise money is oil. And guess what? They can't agree to stabilize prices. Now, it's actually a normal thing in cartels, right? So if you want to look up game theory, there's two models that you could look at, right? There's the prisoner dilemma, okay? And that one you're probably familiar with, right? And that has to do with when you don't really know what the other people are doing. Okay, so you can Google that, prisoner's dilemma. But then the other one you could look at is the Nash equilibrium, otherwise known as the stag hunt. Are you guys familiar with this game? Or as part of game theory? Now we're talking poker. Uh-oh. There we go. So Ryan, are you familiar with Nash equilibrium? Okay, cool. Right on. Well, for those that have seen the movie Brilliant Mind, that's Nash. All right. So prisoner dilemma, you don't know what the other guy's doing, and if you don't know prisoner dilemma, Google it. Okay, but the idea there is you don't know what the other guy's doing. Should you rat? Should you not rat? Okay, fine. So Google that, you'll figure it out. Now the next one is there's two hunters, and you're on land together, and it has to do with whether you both should hunt deer work together to hunt deer or work separately and hunt rabbits. And the interesting thing is you do see what the other guy's doing, and you should act in your best interest will actually be the other person's best interest too. So if you can just work together, you're going to shoot some deer. You can't do it on your own. If you go after shooting deer and the other guy does rabbits, he's going to get a lot of rabbits, but you're not going to get any deer. And if you go, and if he goes at deer and you say, hey, I see he's hunting deer, well, you could screw him up and just say, well, I'm going to grab all the rabbits. And he gets nothing, you get rabbits. But the thing is, you probably really want deer, and if he's going to get deer, you should switch from rabbits to deer, because you can see he's after deer, and you're probably gonna do better off going to the deer. Okay, so you can see what the other person's doing, and you change because it's in your best interest to change, not because your benevolence for the other hunter. Right? If you guys have read Adam Smith, right? The butcher, the brewer, and the baker, right? They're not giving you meat and bread and beer out of benevolence because they like you. They're doing it because they make money, and then the guy that sells you meat can now go buy some beer at the end of the day, right? So anyways, you can Google all that kind of stuff, and so when you're in a cartel, what inevitably happens is a lot of people do better free riding and cheating, right? So they sit down, they agree, all right, everybody cut production. Okay, oil prices go up. Isn't that an incentive to cheat? For example, so Iran just says, yeah, we're going to cut, and they pump a bunch of oil, and sell it at the higher price because of the cartel cutting in supply. You see what I mean? All of a sudden you're like, boom, cheat. I cheated you, but all of a sudden now you made a bunch of money because you screwed over all your friends. You see what I mean? So, yeah, right? So here's the thing. Yeah, I totally agree. Let's all go and shoot some deer. Okay, you go first. I'll be right behind you. And all of a sudden, they're out looking for deer, and you're grabbing all the rabbits, and you're like, rabbits, rabbits, rabbits. I don't mind because I'm going to eat, and that guy's going to get screwed over, right? So there are incentives to cheat and all that kind of stuff. But anyways, so that's you can Google all that kind of stuff. Okay. So yeah, all right. So I'll be here tomorrow. I'm glad we finally got our mic working. I'm a little mad how long it took to do all this, but I love you, man. You're worth the effort. I'm really happy that you're here with me in Boston. So Boston, yeah, 100 cement. What's the election bias in Boston? Well, Rob, I don't know if you can see this. I went to connect to the Wi-Fi just a few minutes ago. Yeah, it's not going to show it. Anyways, some person has a Wi-Fi that I can see on the list of available Wi-Fis, and it says Trump has small hands. That's so it's just like, all right. Not sure what that means, but it's hella funny. It's wicked funny. Here, let me move all this stuff out of the way. So my random stuff. So there we go. Veritas. It means the truth. So if you can think, Harvard teaches you the truth, and from truth you get power. and you take over the world and enslave the dumb people. I'm okay with that. I'm okay with that. But, actually, that joke is actually a very interesting thing. One of the things I might have to discuss today, how free trade is good for everybody. And then all of a sudden you go to developing countries and they're better off, but not a lot better off. And so if you're interested in like the social side of macroeconomics, it would be an interesting thing to study. It'd be a very interesting thing to study. But whether you should continue to export your primary goods, like whatever, like South Africa, for example, we have a lot of South African friends, right? A lot of what South Africa does is dig stuff out of the dirt and sell it. That's it. Like, what do you do? I'm just kind of looking for some gold, or I don't know, a diamond would be nice. Yeah, anything shiny, I put it in my bucket and I sell it to some people, right? Those are primary goods, right? And at some point, a country like South Africa says, look, we want to do more than just digging stuff out of the dirt. I guess I should put eye candy back. I thought I was done, but I guess I'm not. I guess we want to do more than just dig dirt and look for shiny things, right? So let's build an industry, industrialization, right? But now you have to compete in the open market. Is that fair for South Africa to compete against German manufacturers? No. On the short run, it's going to be very impossible, in fact, right? But let's say the government says this is what the government's going to do. Instead of stealing money and building mansions, we'll actually take the money and build an industry so that we don't have to rely on digging in the dirt all day, right? Well, that would be smart, maybe, right? But it's going to take a while, isn't it? So the country says, all right, we want to get into biotechnology or whatever it is, right? We want to do a secondary or tertiary product and develop something really, really good. Okay, we want to make things, right? Or sell intellectual idea, like a tertiary product would be like accounting consulting and stuff, right? Business consulting and legal work. So let's say South Africa says, well, we want to go from digging stuff out of the dirt to like making things. We want to make things. All right. So what the government needs to say is, well, we're going to need to build a new industry. We're going to need to subsidize it. We're going to need to somehow train and educate people and get the knowledge here. We're going to need to build some of the first factories, or we're going to have to borrow money because local companies don't have that kind of capital and borrowing power. And we're going to like cut their taxes. We're going to give them all kinds of benefits. And all right, so that'll go for maybe 10 or 20 years. And there are models for these, right? Where's the government going to get the money? They're going to take it away from the gold miners and the diamond miners, tax them, and then give it to this new industry, which is not competitive, which is not profitable, but they see it in 20 years could be very profitable, could be very competitive, right? And most likely wages in South Africa would still be lower than wages in Germany, and they would have either an absolute advantage or at least a comparative advantage for that what new industry in South Africa. And eventually, as people get trained and get skilled and that industry starts to flourish and expand, wages should go up, right? Because how educated do you need to be, digging in a hole in the ground with an axe and a bucket, right? But if you're doing biotech or whatever it is, if you're just manufacturing something in a factory at the very least, right? You may need some education, but so anyways, So free trade is a slow process, I think, in developing countries, right? And there's sometimes a need for those countries to say, well, let's close the borders. Let's not import German biotech. Let's make our biotech here in South Africa and then compete with Germans globally in biotechnology, or compete with everybody globally. But that's a long road, right? Like, when is El Salvador going to compete in a manufacturing or a tertiary intellectual type product? So El Salvador does what? Cocaine and sugar, maybe some tobacco. I don't know. So when do they move into the global economy? Well, their borders are closed. They don't really have a government system that is worthy of foreign direct investment. You see what I mean? Why would a capitalist want to risk his capital by going to some place that he feels that there's a high probability of losing that capital? So you got to go through a process, right? Open your borders, start doing trading, have a comparative advantage, even though it may just be simply low wages. If multinational corporations come in, yes, they're going to hire people, they're going to invest, they're going to build some factories, but ultimately they're just going to pay you a little bit of money and you're a little bit better off. And then they're going to sell those products for way more than they paid you for, because you're willing to work for almost anything, right? So they sell it in rich countries, make huge profits, stock prices go up, and those guys get filthy, stinking rich, where the average factory worker or even factory owner in the developing country doesn't do that well. But you do have a job, and there is a factory, and money is starting to flow your way. So maybe over the long haul, things do get better, right? So you have to say, what model works? So if you think 50 years ago, all right, now we're really getting into it, right? 50 years ago, you had, or let's say even 100 years ago, how many capitalist countries were there? United States, England. I mean, like, all of a sudden, like, and Australia, kind of. They were more of a colony or a post-colony. They were not truly independent until closer to World War I, right? So, yeah, I guess they're about 100 years for Australia, probably exactly 100 years for Australia, right? Because I'm thinking of Gallipoli, and Gallipoli was 100 years ago, and Australia had just become independent. But anyways, not a highly developed capitalist system yet, right? And then you move forward a little bit. What are the examples of countries that you could say, this is why we know capitalism works? Can you think of any? Where are the success stories that didn't exist 100 years ago, or maybe even 50 years ago, hint, hint, didn't exist 50 years ago, but now you can say, see, look, capitalism works. Can you think? Hong Kong, great. China in general, sure. Singapore, Japan, Korea, and then you can go Australia, Canada, even India. Yeah. And then what were the other models that were tried, right? Russia, right? So you had the communist slash socialist stuff, right? So you have Russia, Soviet Union, right? And let's just say the whole Eastern European bloc, because they were under Soviet control, right? But right, you have Cuba, you have Venezuela, basically most of Latin America turned socialist, right? Or even dictator. Remember, Argentina, when it was a capitalist country, became filthy, stinking rich. It was the 5th richest country in the world. Then the socialist, communist guys out of Russia started pouring all over the place in Latin America, and a lot of these things shut down. So Argentina's still poor. I mean, it's a beautiful country They have beautiful land. They have lots of natural resources. They're just, loco and cabeza economically. They got to get their act together, right? And so, but you can see that there's hope there if they can figure things out. There was some hope there in Brazil as they move towards capitalism. Now, when you're stealing money and all that kind of stuff, it's not good. So even the president of Brazil was stealing money, which means everybody was stealing money from Petrobras and all this kind of stuff. And, that's a no-no. You should not steal money. The government should give to the people. So, you can't blame that on capitalism. That's thievery. But so anyway, so now we have these models where when you look at the most successful, economically successful economies in the world, they're all capitalist pig dogs. Now, you have Canada's like capitalist socialist, right? I think there's 25 million people in Canada and 27 million employees in the government. So, and none of them know what the other guy's doing. So I don't know, but it is a system. If you look at like Norway and Sweden, again, socialist capitalist, but they're smaller economies, right? So if you look at Canada, there's 25 million people. If you look at Australia, there's about 25 million people. You look at California, there's 25 million people. Should the United States have the same political policies as Denmark and Norway? Should Canada and Australia have the same political policies? I mean, you can see how much bigger the economies are, and they're going to be more complicated, right? So then you go to Shanghai. The city of Shanghai has 25 million people. Should they have the same political, policies in place? One city the size of California, and California is the size of like Canada or Australia, right? And then you have other successful capitalist socialist programs, but they only have 12 million people or 10 or 5 million people, right? Look at Sweden versus Shanghai. You can't have the same systems, right? But I think if you want to truly be a capitalist and truly be successful, that you need like political freedom to pick the right people to make the changes. And if there's not enough social aspects of the economy, you need to make it, but not too much, because then you create a welfare state and everyone stops working when you do that either, right? So, right? So I don't know. That's where we are. And then prove it all in a model. Well, Ryan, the idea is, hopefully you get good candidates, right? Some with small hands. But if you're wealthy because you have money, you have a small business, okay? I met a guy one time, and he was just a blue collar, average Joe kind of guy, but he was filthy, stinking rich. I'm like, well, what do you do? I mean, like, he didn't look like a billionaire, or he wasn't a billionaire, but this guy had money. I'm like, well, what do you do if And he's like, sheet metal. I own a sheet metal company, ran it for 25 years, dumped it, sold it for $70 million, and we got money, right? But with money, if you have the ability to just say, I want to give it to this candidate or to this party, so I'm going to give it to this candidate, that candidate, that candidate, and that candidate, because they're all in the same party. Or if you say, I just want to promote, so I'll make flyers, I'll buy TV ads, I'll buy radio ads, because I believe in something important. And it may not even be like representative politics, but like, let's say something horrible happens to your child, and you're just like, I'm gonna hunt that mofo down. I'm gonna kill him. I'm gonna get TV ads and radio ads, and I'm gonna have Goodyear blimps fly over the city that says, "Find this guy and kill him. $10 million reward." Right? I think there was actually a movie about that. Right? Wasn't there a movie about that? Someone kidnaps a rich guy's daughter, and they demand, $10 million ransom, and he goes on TV and he's like, "I'll pay someone $100 million to save my daughter and give me these guys alive, hunt them down, capture them, save my daughter, and give me this guy." Yeah, so. Anyways, that's power, though, right? Money is power. So if you can then influence politics, I mean, and then we get into the argument of special interest groups and all that kind of stuff and lobbying. But at least you can. What if you lived in a country where you're filthy, stinking rich, like maybe Russia, and have no political power at all, and Putin could just come in one day and say, you're going to work in the salt mines now, and I'm taking your $20 billion. And you're like, you can't do that. I'm going to sue you, right? So it's nice to have political power, but political power requires money, right? Because you need to buy ads and go on the road and tell your story and all that kind of stuff. So anyways, hey, I got to jump, babe. Thanks for hanging. I'll see you tomorrow. Peace on earth. May the pips be with you. May our profits be above average. See you tomorrow. Cheers, mate.